Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found on our YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both positive and negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The securities discussed herein do not represent an entire portfolio and in aggregate may only represent a small percentage of a strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time. This video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can be found on our website at crescat.net. So let's get started. So what happened last week, a lot of people will talk about the unwind of the Japanese yen carry trade. It's questionable whether there was really an unwind. We'll get into that a little bit later, but Japanese stocks certainly were down even more than U.S. stocks were down on Monday. But on Monday, we had a significant down day, and all week our Crescat's short strategies, our long short and global macro fund have been benefiting from the short positions in those strategies. We think there's a lot more to come. The news of Warren Buffett selling almost half of his Apple holdings, Apple computer holdings, which came out on Saturday last weekend, I think was a big catalyst for the market sell-off on Monday. Even more so than the yen carry trade unwind. So look, here is a technical chart from John Hussman. A lot of people, look at John Hussman's research, call him a perma bear. He's a Stanford PhD, really smart guy, a money manager. He uses valuation criteria to highlight when it's highly risky to be owning stocks. But when he comes up with technical indicators that also confirm his valuation hypothesis, it gets really interesting. This is a technical setup that Hussman just put out today because we had that big 2% up day in the S&P. What was it, yesterday or the day before? And so that was a new kind of criteria to add to the picture here, so when the S&P is up more than 2% daily, when you have new 52-week, the number of 52-week lows exceeding the number of 52-week highs, when you have fewer than 60% of individual stocks above their respective 200-day moving average and averages, and when you have at least two Hindenburg omen signals in the past 10 weeks. Hindenburg omen signal was when you have both a large number of new highs and new 52-week highs and new 52-week lows at the same time. It's a measure of divergence. It also has some breadth. You also have to be in an uptrend, and you have to have a market breadth deterioration with the McClellan oscillator, yada yada. But look at. We have this valuation top at the same time as we have this incredible confluence of technical signals. These red lines in this chart are all the other times when you had this same confluence of technical indicators, and here we are today. Let's go on to the next. This is showing Hussman's main valuation level criteria, and he put this one out on Monday after we'd already had Monday morning after we'd already had a big downward move in the S&P 500, and you can see that even after that first little leg down, we are still near a top in this GVA to market cap, to this market cap to GVA measure, basically. That is a fundamental valuation measure. It's kind of like a Warren Buffett market cap to GDP type indicator, but showing that the overall S&P 500 is basically at the highest valuations it's been since that 2021 top, and before that since 1929, even higher than the tech bubble top in 2000. So the point being, we're still at the top here. We haven't seen anything yet when it comes to this market correction that we're expecting. At the same time, we have all these advanced recession leading indicator kind of signals coming up. And of course, if we get a market meltdown, that will be one of the factors leading us into a recession. But let's go on to the next. So this was the VIX, the volatility index, on Monday, which spiked to a high that was reminiscent of the COVID early 2020 market VIX spike. And but there's some disagreement out there among technicians and market watchers and strategists, et cetera, as to whether volatility really spiked as much as it did. If you look at the volatility index on the futures, the CBOE VIX futures, as opposed to just the VIX index, you can see the VIX futures were open a much longer, more continuous period. So there you can see there was a lower spike than the VIX index, and basically there was some orders, someone putting on put options, put option exposure long right at the market open, which caused that CBOE VIX index to have an unusual spike at the open. But I think it overstated the vol spike. Vol has since pulled back substantially over the course of the whole week. I think it's a setup for a much bigger and more prolonged spike in vol, like we've seen in other bear markets and recessions. I don't think this is a one-day Volmageddon type of a spike. I think it's something that is only the beginning, like those valuation charts that we were just looking at showed. So let's go on to the next. Again, a fundamental chart here looking at profit margin. When profit margins peak, you're at the peak of a cycle. It's just another indication fundamentally of how much downside there is in fundamentals if we go into a real recession, a real market downturn. When you start with peak margins and peak profits at the top of a business cycle, you shouldn't be stacking on a record market multiple on top of that. You should be stacking a low multiple on top of it, because you need to be looking forward to the business cycle and just more evidence, and especially when you look at the 5 of the Magnificent 7, when you add those, this is looking at it, with and without mega cap tech. What is it here? It's mega cap tech X NVIDIA and mega cap tech. So it's basically looking at mega cap tech margins, and it's showing that they're at record high margins. This is a large cap, mega cap tech dominated market. We've shown 100 different ways as to why this is the signal for the market top, this unsustainability in this AI euphoria of the fundamentals for the mega caps. This is just another way of looking at it and showing how we're at peak margins for these companies cyclically. Let's go on to the next. Record stock ownership. among households. So again, part of the setup for why this is likely to be an historic type of a market top. Household positioning in stocks is offsides. It is at a record percentage of total financial assets is allocated to stocks right now among U.S. households, and it's the same as where we were at that shorter term market peak back at the end of 2021, and it's the highest it's been in the history of this data essentially. So let's keep going. So there was a lot of talk about the unwind of the yen carry trade because, over the weekend and on Monday morning, Japanese stocks were down even more than U.S. stocks, and so all the talk was about the unwind of the yen carry trade. The Bank of Japan gave a surprise, rate hike, and that had been causing the yen to strengthen. But it wasn't until early Monday morning that Japanese stocks collapsed. And this was just an interesting post on Twitter with all of the news media and market pundits talking about the unwind of the yen carry trade rather than the unwind of Warren Buffett's Apple stock. This guy said, well, J.P. Morgan and Goldman Sachs are both saying that the unwind of the yen carry trade is basically already fully played out. And this guy, Nobody Special at JG_nuke on Twitter said, how does the yen carry trade, or how does the yen weaken as the carry trade unwinds? I mean, look, if the yen carry trade was really unwinding, the yen would be strengthening like crazy. And it just shows that during the period of the collapse, the yen actually appreciated. So let's go on to the next. And the point of that is the BOJ has still got the biggest balance sheet relative to GDP of any central bank on the planet, and there's a lot more potential issues to play out in Japan and to play out with the dollar versus the Japanese yen, and Tavi may have some more comments on that. But here's another chart showing basically the prime rate is from B of A, and showing how small businesses their funding is basically tied to the prime rate, and we're at the highest prime rate since September 2007, basically at the peak of the housing bubble. And this is affecting small businesses. Why does that matter? Let's look at the next chart. It matters, and this is something a point that Tavi has been making for a while, is that when it comes to the employment data and the likelihood for further weakening in the employment data, it matters because small businesses are the biggest jobs creators, in the country, and now you can see here, small business loan availability indicator in dark blue, how that has already been trending down. Small businesses are having trouble accessing credit. Do you think this is going to affect employment? Look at how historically it normally correlates really well. Right now, we think it's a leading indicator. For initial jobless claims, and we had this kind of surprise, or 1 week of better than expected initial jobless claims on what was that, Tuesday, and the market rallies on that. I mean, come on, look at a 4-week moving average of initial jobless claims, this is something that we're still in the early innings of the employment data weakening here, and we can't, we don't want to rely on one better than expected weekly jobless claims data to say we're out of the woods on an impending recession. No way. But I think that's a couple more for me, and I'll wrap up. Commodities. This chart was going around on Bloomberg. And just showing positioning how hedge funds. This is a contrary indicator. When hedge funds are ultra bearish in their positioning on commodities, this looking at a basket of 20 commodities, it's normally a bullish signal, just like it was in early 2016, just like it was in 2019, going into 2020. It didn't unfold till later in 2020 after the COVID recession, but it unfolded in a big way. So we still believe we're in a great rotation kind of market, meaning the rotation out of overvalued long duration financial assets. That means things like mega cap tech growth stocks, as well as fixed income securities and long duration treasuries, and a rotation into undervalued commodities in a stagflationary type of a recession still to play out. All this fear of another 2008 kind of a deflationary recession is reflected in this positioning right here, and in commodities in general, which are still ultra depressed relative to the S&P 500. And we like commodities. Let's go on to the next. We especially like gold. Snowline Gold is our largest public equity position across the whole firm, and it's been pulling back recently because of this Yukon mining incident at Victoria, their Eagle mine, which is unrelated to Snowline, except it happens to be in the same in the same province in Canada, and so everything Yukon related got sold off. We think it's an overreaction. Mining in the Yukon is not going to stop. Snowline just a few days ago did an island reversal, double bottom. Island reversal meaning that one day it was down a few days ago near 4, touched into the 3s. When Snowline put out their results, which I'm sure Quentin is going to talk about yesterday, it popped back up substantially. I think we have an island reversal. That's when you have a stranded price there. It looks like it's stranded on an island. Very bullish technical signal. I think I think that's a double bottom on the bottom of that channel. I think it's going to be breaking out above that $6 Canadian per share level that you see at the top of this channel. I think the next step is breakout above there. Michael Gray at Agentis just put out a new research report reiterating his $23 price target. We think that's conservative. Anyway, I'm sure Quentin will be talking more about Snowline. Hopefully the worst is over there. It looks like a great opportunity here. That's it for me. We're going to turn it over to Tavi now for more macro.
All right. Well, thanks, Kevin. Let's get started with some more macro if you're interested in that. So I think one of the things that has been, I think in my mind, is this market rotation idea. This is the weight of the S&P 500 in two different parts of the market, the technology sector in red, and then the white one is basically looking at the energy plus the materials. And you can see we go through these cyclical rotation periods where technology is leading the way for a while, and energy and materials are lagging and becoming less and less relevant. And then we see a turn because, for dollars coming out of tech, they start coming back into energy and materials. And I would suspect that usually that comes back into when sentiment is also very extreme in both sides of this trade. And so that is certainly the case today in terms of how we see folks and the conventional thought that technology will keep leading the way. And that's certainly not my view. My view is, again, remember the phrase from Simzel, where the opportunity likely is where there's lack of capital interest. You don't lack capital interest when you're 30, almost 40% of the index. It's all the way around. And just to point out something regarding, the potential for these types of rotation periods, I wanted to mention something regarding the Japanese yen and the yen carry trade idea. And if you think about it, the BOJ, it was basically looking to raise interest rates by 25 basis points, which the magnitude of the move we had, just because of 25 basis points, give you a sense of how messed up things are on the macro world. But outside of that, what is the difference between, for a carry trade standpoint of the BOJ raising interest rates by 25 basis points or the Federal Reserve actually cutting interest rates by 25 basis points? I think that's a fair assessment of the situation. In other words, if the Fed cut interest rates, does that mean we're going to see more turmoil coming from the yen carry trade? No, personally, I don't think that's the big story. I think usually the narrative likes, from the media, likes to focus on a few things that are usually not as important as the overall picture. To me, the overall picture is right in front of you. Is this shift of leadership caused by what people see as important market dynamics, but it really is the setting that we have currently for something more like a real increase in volatility moving forward. And so, to me, this is opportunity right in your screen and how to position moving forward. Anyways, let's go to the next chart. This chart is also important because the yellow line is showing gold prices, which we've been bullish on it for some time now, and gold prices are at record levels. And the other one is the blue line, which we have also been bullish for a long time, which is overall commodities. And this one is looking at an equal weighted index for, I believe it's Goldman Sachs that does this index. And you can see that they usually trend very closely, right? And so you had back in 2007, 2008, 2009, all that period, those two lines are very tightly close to each other. Even during the decline of gold prices after 2011 and that bear market we saw all the way to 2016 or so. And then we saw really in 2018 or so, gold prices begin to really rally ahead of the commodity prices. So we did see a leading indicator towards that, where the metal was telling you, well, inflation is probably going to go higher. Again, this is doing exactly the same. And I think, although I don't want to go too much in front of all this, and think too much ahead of what could potentially happen, but let's assume we do see a blue line or overall commodities actually catching up to gold prices again, as it tends to do historically. What would that do to the Federal Reserve's situation? It would make it very challenging because clearly we're seeing, deceleration, if not contraction, of growth in the U.S. already, economically speaking. And at the same time, inflation also accelerating to the upside. Well, that's called what we say stagflation. And this is what that environment does to you. And I think that we're probably likely to see something along those lines. What is going to be interesting from this is that the Fed is not going to be able, most likely, to act on that inflationary pressure coming back. And the main reason for this is because of something we wrote in our recent letter, but also we've been talking about this in this last presentations, which has to do with the interest payment relative to GDP right now, which is becoming very pronounced and probably should be, in my view, the most important actually indicator anybody should be paying attention to, because that's what's going to drive most likely policy making moving forward. Anyways, let's go to the next chart. And Kevin made a point, and I'm not going to go deep into this, but as you can see, if that's the setup where gold is leading the way, and at the same time you have hedge funds actually turning overly bearish, and if you look at this chart, every time we see an overly bearish environment, or I should say positioning from hedge funds in the commodity space, well, guess what? That's usually a turning point, a very key turning point. And are we in another one of those pivotal moments? And I think we are. I think there's very high potential that the commodity prices overall can actually also follow gold prices in the near future. Let's go to the next chart. Now, in this next chart, I'm showing just an example of the DBA in agricultural commodities. And you can see this. Why am I showing this? Is because food prices depend on this, right? Food prices are very impacted by agricultural commodities. In fact, if you think about the especially lower classes financially in the U.S. and other places in the world, they are really, they can be actually really impacted by upper movement in agricultural commodities. And so as you can see here, this ETF DBA is basically have surged recently, mostly caused by cocoa, if all of you remember. And then it crashed and went from 26 all the way down to 23, as you can see there in the chart. And that 23 level was actually the prior peak of 2022, when we had the Russian invasion in Ukraine, and which caused most commodities to spike. So here we are now back to those levels, and that's creating a major support. And actually, this chart is slightly old; it's like 2 days old, because the green bar there did mark a bottom, and we've seen an upper movement and a strong move today in agricultural commodities. Let's go to the next chart. This is just me circling now the two areas, just to make sure you all can see that important area where this chart has been bottoming. If we go to the next chart, you can see another interesting aspect, which I think is just as relevant as the prior charts, is the allocation across family offices. So I was showing, that leadership. First chart was showing the leadership of technology versus resource-related sectors, and this chart, I guess, shows why we're seeing this. And if you look at the section that shows commodities, and you can pause this video and look at your own time, you will see that it's a very small amount. So basically, you're seeing three circles. One is family offices of 50 million to 500 million. Another one is from 500 to $1 billion. And the other one is $1 billion above. And all of those show that they have ultra low commodities allocation today. And so relative, especially to overall equities and fixed income and others. And so, capital at some point flows back into things that have been neglected for a long time. And this is probably going to be the case here. So it is important to be finding these types of supporting data points that certainly, I would say, add to the commodity thesis. Let's go to the next chart. On the next chart, you can see two things: the balance sheet of the Fed, and secondly, you can also see the 2-year yield at the bottom. The 2-year yield has been dropping. We've talked about the idea of T-bills and chill, although 2-year yields are not T-bills. T-bills are a little shorter duration than that. But you can see that they tend to move very closely as the Fed starts seeing the percentage or the implied probability here of the Fed actually cutting interest rates should be reflected on the decline of the white line. The point of the chart is to show that when you see a real downward movement in the 2-year yield, you also tend to see the Fed balance sheet to start to rise. And I think Quinton made a point recently internally that he realized that the green line in this chart, in this case, the balance sheet of the Fed, has been leveling off. It was declining in a trend that was much faster than the prior months, and recently has been showing some signs of bottoming, perhaps. And it wouldn't be too surprising to see actually that reversing in a big way, as we see usually when the 2-year yield falls, and that actually coincides with a recession as well. So this is an important aspect because it adds to the prior points of tangible assets, particularly when you have, imagine actually seeing the green line rising in a period where commodity prices are also already accelerating for their own reasons. And so this could add more, I guess, fuel to the fire of inflation overall. Let's go to the next chart. On the next chart now, it's just an idea of listening to the bond market and not to the equity market a lot of times. And this is just what the bond market is telling us regarding where the Fed interest rate it will be in the next 12 months. And this is the most implied cuts that we've seen all the way back to the 80s, if you looked at this chart, or I should say all the way back to the global financial crisis. But really, if you see the dashed line, you can see clearly that all the times we've seen that the bond market speaking this loudly, we actually had a recession. So indeed, the bond market was right. And what we end up seeing was that equity markets had to correct and to adjust and reprice according to what the bond market was alarming. And this is certainly the case here once again. And so, especially at a time when we have a few days like recently when volatility spiked and people still think this is just a unique event and we're going to go back to normal. But the real problem is that those issues, when volatility spikes the way it did, it just really breaks the credibility and stability of the market in a large way. It makes people behave differently, especially when it considers hedging for a portfolio and other aspects of money management. And so that certainly was that confidence was broken, in my view, back in Monday of and it's been breaking, recently actually, but more with more authority. I think that movement happened in Monday is something, not that we're going to see more days like that, but certainly that we're probably going to see volatility staying higher for longer. And there are a lot of instruments that are just not reflecting that world just yet. And that makes sense, because if you remember the chart that shows the Fed funds rate, when we have a hiking cycle, there's a lagging effect on volatility. There's also a lagging effect on the cost of capital that it rises at some point in corporations, because as the Fed leads that movement on the policy side, at some point companies just start actually having to reissue their debt or roll their debt, and then taking on higher interest rates, and therefore squeezing their margins. And so you do tend to see the increase of volatility with a lagging effect. But remember, we've been in a hiking cycle already for some time now. We're already at the point where we should be seeing that volatility spike, which already happened recently. But I do think that it's here to stay. It's not just a unique event. Let's go to the next chart. On the next chart now, you're looking at another type of rotation, which, if you research, and this, I guess this chart is a great analysis for this, supporting the view that when people say that we're going to see a rotation out of the mega caps in a very peaceful manner, and we're going to just rotate back into other sectors and everything is going to be fine. Unfortunately, history does not agree at all with that view. And this chart is great because it goes back to the 1900s. And it shows when you have this large percentage weighting of most of the large companies, and they start to rebalance. In other words, they start to fall relative to the overall market. That tends to happen in a very nasty manner. And I think that's going to happen again. I mean, if you look at this chart right now, we're at the same level we were at the very peak of the 1929. This is kind of a scary chart. But certainly, you should add to your views about what would that cause to volatility, what would that cause to credit spreads, and all sorts of things that can still move and be the next dominoes to fall. Let's go to the next chart. Another way to see this as well is the number of times people or companies have mentioned the word Fed or Federal Reserve, or any term that refers to the Federal Reserve overall, or the monetary authority here in the US. And you can see here, this is by far the largest, and probably another reason where interest rate policy is starting to become a problem and a challenge for most companies. And remember, the duration of the debt on the corporate side, a lot of that debt is going to be coming due here soon. And so those companies are starting to actually having to reissue their debt, and actually look at how to restructure their balance sheets. And those issues are, I think, very significant, and will again add to the volatility profile of the overall market. Let's go to the next chart. Buffett actually sold, his about half of his Apple shares or position. And at the same time, as you can see here, he's sitting in about 1/4 of $1 trillion in cash or cash equivalents. Now, talk about T-bill and chill. That is the definition of T-billing and chilling. So, if this is, a lot of people talk about Warren Buffett as being a great, perhaps a great value investor. There's no, I guess, argument against that. But to me, he's actually one of the smartest macro guys I've seen. I can only imagine, sitting back and relaxing with 1/4 of $1 trillion in cash, waiting to deploy at the right time. What a genius move. And a lot of people are seeing this, and saying, well, we've seen the number of his cash position being at record levels for some time now. But come on, just look at the chart. You can see the massive spike that we're seeing relative to any other year. This is definitely unique. If you're not seeing this as a signal, you're probably going to get caught up, just like most retail investors, unfortunately, that tend to hold the bag at the end of the day. Let's go to the next chart. Almost done. A saturation of the market is seen as well when you look at the foreign holdings of U.S. equities. And you have to ask yourself, where's capital going to come from? We're going to have to do a lot of QE to really, feed the need of these inflated valuations. That is, and by the way, this is normal. Every few decades, we have leadership coming from U.S. markets and then switches to emerging markets and the rest of the world. And so that valuation differential is normal. It tends to last a few decades. And guess what? We've had probably the most pronounced period of U.S. equities outperformance relative to the rest of the world maybe in history. If it's not history, it's close to it. And I said it before, I think a lot of that has to do with fiscal spending in the U.S. versus other places in the world. A lot of that has to do with the global reserve currency, allowing the government to spend more than other places. And you have to also ask yourself, is that something that is sustainable? Especially when you have interest payments really becoming a large percentage of overall government spending, more than 50% now. And so I think that that's eating the government's capabilities of actually generating growth through fiscal indisciplinary policies, which are also unsustainable at some point. You can only do that for so long. And we've been doing this for a very long time. As I said, in average, since 2008, we actually spent about 8% of GDP on fiscal deficit. So, it is a very significant number. I don't think we've ever seen anything like this in history outside of war periods. And so, nonetheless, let's go to the next chart. And so you can see here when VIX spiked recently, and there are some, Kevin's right, there's a lot of folks calling out for the technicality issues of this, high prints in the VIX. And by the way, this one that I'm showing in the screen, it does not use that crazy VIX number that went all the way to 70 or so. However, as you can see here, there are other things that tend to actually spike when you see this red line spiking. And one of them is a junk spread. So, if you think about it, when companies with a very low or poor credit rating, as we see more volatility in markets, you should also see more volatility in terms of the cost of debt of those companies. And that is something that has just not happened yet. And the widening of spreads is something that, as you can see in this chart, it happens every time we see some sort of downturn. And so if I would suspect, I would say that the junk bond market looks very fragile. And I would say that there is a very, very strong possibility that you're seeing the yield curve movement. If you throw the yield curve in this chart, it looks just like it, meaning the yield curve is already also positioning that the junk spreads are also going to spike. So our biggest risk is actually access for capital in the next 12 months or so. If there is an environment like I'm showing in the screen of a spike of widening in spreads, it's going to be difficult, unfortunately, for companies that are highly levered. Let's go to the next chart. And you can see another way of playing this, and we did this in our funds as well. But you can see that this is basically looking at implied volatility of the S&P. So for those who don't know, what is the VIX? The VIX is looking at the 1 month implied volatility of the put option in SPY ETF. And you can see here in this chart that you're looking at the differential between that versus the also implied volatility of the HYG puts. HYG is the ETF for junk bonds. So this is basically showing you how cheap putting a hedge on junk bonds in if there's a downturn in junk bonds, how cheap that is relative to the hedge in the S&P 500. And so, this is a very interesting, setup for those investors that are looking for a hedge. And I do think that that's probably going to be the fact that the white line, should say the light blue line, is probably going to be moving the other direction. Probably likely to be moving higher, not lower anymore, because it's already at basically record levels. And so something I'm probably not going to get much cheaper than what it is right now. So it's good timing, in my view, to be adding to that exposure. I believe this is my last chart, but I want to prove it. Let's see. Can we pass it on to the next slide?
Uh-oh, we're stuck.
Uh-oh. We don't want to be stuck with my slides. Let's pass it on to Quentin.
There we go. The geologist is in the house. All right. Okay, a lot of people ask me from time to time, they say, what's an economic geologist? And it's hard to explain because it's like, what? That sounds rather obtuse. I don't know. It's hard to explain. People think, oh, maybe you study the math of rocks or something. No. An economic geologist is basically a prospector. The people that get these degrees in economic geology, their passion is usually around going out and exploring for ore deposits. Okay, so an economic geologist, best way to think of it is a modern day prospector. Okay, and you can see our old prospector here. He's got his pretty much all the tools one would expect. You can kind of see the pick. It's on the back side. It's pointing out just above the ear or next to the ear of the donkey. Gold pan, etc. These are the tools that a prospector would have used years and years ago. But I got a question recently from somebody, and it made me think, well, let's explore how modern prospectors, these economic geologists, these exploration geologists, go out and actually do their sampling. How do they find metals in the ground? Okay, or how do they, what do they do on the surface of the earth to explore for metals? And in particular, I'm going to speak about sampling, how we sample for stuff. Go to the next slide. Okay, here you can see a modern day prospector. This is a geologist clearly excited by the rock he holds in his hands there. You can see a bit of shiny stuff, sulfides of some sort. But this is 100 years or maybe 150 further advanced from the first slide that we saw. This guy is what you'd see out in the field right now. Who is it? I don't know who this is. This isn't a picture I took. I grabbed it off the internet. But we're going to talk about the work that people like this do to collect samples. In particular, we're going to talk about systematic sampling at surface, which has a variety of names we'll touch on here in a minute. Go to the next slide. Okay, when you're out in nature, it is often, or it's common that you don't have a lot of outcrop to work with. Okay, everybody, has their own, environment they live in. If you're in the desert, there could be lots of outcrop, but most people don't. Okay, most people live or work in areas where there is considerable cover. That cover can be vegetation, like you see here. There's a lot of vegetation. It can also be other things like soils or till, from glaciers, things like that. Okay, but more often than not, it's very rare that we actually have outcrop to work with in most of the environments that we're out exploring. This happens to be up in the Yukon. It's one of our favorite projects at Valley, and outcrops like the one that these guys are standing next to, Scott's with his back to us. These are what they would have channel sampled in the early days. Okay, they would have actually taken rock. I drew a little red line on there to show you what I'm getting at. They would have taken rock in a systematic way across from that outcrop to get a sense of what is in the rock, what kind of metals and value might be there. Go to the next slide. Here's another picture of, there we go, one of our favorite companies. This is Lele from Goliath. Lele is Swiss. He likes to climb up mountains. People with big butts like myself don't, but Lele managed to drag my fat hiney up this hill, and we had a look at an outcrop that he found. Okay, and this this is a classic case of geologists working super hard out in the bush, okay, where most people haven't even seen, rock. Like even prospectors didn't get up here, and finding new stuff, okay. And this red line I drew on there is roughly the position of a channel sample that they took across this outcrop. It was just one outcrop sticking out of the trees. Happened to see it. They kind of cleared. They pushed away some trees and pushed the soil away so they could get a better view of it. But this is all they had to work with, and they found a nice big fat kind of sherbet style vein right there. I think there were some pretty good numbers off of that too. I think there's like 10 plus gram in a few of the channel samples there. Anyway, let's go to the next slide. And then you have places like this. This is our friend Nick Rodway at Core Assets. In this case, we're up at we're up at the blue property. We're way up in elevation where there were glaciers or glaciation recently, and the glaciers tend to leave behind till. Okay, so right behind Nick, you can see some till, which is basically a rubbly debris that was left behind by glaciers. But every once in a while, poking out from this, you get a nice polished outcrop. In this case, the dark material is a variety of sulfides that are kind of oxidizing and weathering away. It's easy to see, wow, there's something really interesting here. And yeah, Nick channel sampled things like this fairly systematically a couple of years ago, and that's what led to the discovery of the sulfide city and other adjoining CRD deposits. All right, so okay, this is interesting. Let's go to the next slide. Sometimes though, we have to work hard to get exposure to that bedrock. This slide is actually an aerial shot of the Keats Trench at Newfound Gold. So this is part of the Queensway property. And in this case, they had to use excavators. They basically had to dig down several meters to get to the goodies. Okay, they had to get down through the till. This is mostly glacial till, so sands and gravels and loose material of wide variety. But once they got down to down to bedrock, they could see those vein structures, and they're highlighted in the dark red. Now I put on here some red lines that represents places where they channel sample. I can't find the exact map. They had one that they showed in one of their news releases, or maybe it was a video at one point in time. But this is just to show you that once you dig down there and you clean off that outcrop, like the guy is up in the upper left there, literally spraying the thing down, just cleaning it with a high pressure hose till you're down to the bare rock and you can easily see what's going on. Anyway, once you get that kind of access to the rock, you can do all sorts of channel sampling. You can come in here and take samples along straight lines to get a sense of what the grades are in the bedrock there. Okay, this is really interesting stuff. This requires a lot of work though. Can you imagine finding this like in the initial discovery? And I didn't meet Keats, by the way. I sat next to him at a dinner about a year ago, and what did they find? Well, they actually found, to start with, they found boulders. Okay, pieces of material in the glacial till that had been ripped off of the underlying bedrock. So they found pieces of quartz with visible gold and stuff like that. So that kind of led them into this. But imagine trying to prospect where you have a lot of cover like this. Pretty challenging. Nonetheless, we need to get that access so we can better understand what the mineral discovery might be. Let's go to the next slide. Okay, and even underground, when we're mining, you typically do sampling along channels. Okay, again, lines. Think lines of samples that you're collecting. So continuous sampling along a straight line that was undertaken by somebody underground at the working face of a drift. All right, and in this case, the lines represent where the samples were taken. Along the horizontal line, that's where it was taken, and then the vertical lines are simply sample breaks. So you take sample maybe every half meter, or something like that, and you get a pretty clear idea what the grades are across that entire working face. All right, so this is how geologists approach sampling, systematic sampling in places where they have access to rock faces, whether it's at surface or underground. Let's go to the next slide. Okay, so now what tools do they use? Okay, so look, very commonly we use diamond blade saws. Okay, this guy here is sawing an outcrop. That's a rock outcrop he's standing on, and he saws it with this diamond blade. You might say, "Well, that sounds scary." Look, it's actually probably safer. It's not safe, but it's it's probably easier to saw with the diamond blade than it is, with the conventional blade with sharp teeth on it. Okay, the diamond blade actually cuts because it has little tiny diamonds embedded around the edge of that blade that abrade. They scrape at the rock surface itself, and because diamond is so hard, they can cut down through the rock. But if you were to go up and touch the blade, it's actually not that sharp, and it's not that big hazard. It's not to say it isn't without hazard, but it's not super sharp. You wouldn't cut your foot off, for example, with it. But this is how we do it. Okay, we cut lines through the rock along places where a geologist denoted he wants a sample, he or she wants a sample. All right, go to the next slide. Okay, what would the channels look like? Look, to get a sample, you can't just cut one line. Okay, you have to kind of cut two lines so you can actually get some rock in between your two cuts and sample it. Okay, now sometimes people do, and look, it's difficult because you have to stand at an angle, but you can cut two angles like you see on the left-hand side there. You can cut two angle cuts and then break out that little triangular bit of rock in between, long stick of triangular shaped rock. That could be your sample. More common though, we cut vertical channels, and these things might go down an inch or two. Okay, an inch or two. But you cut two vertical. The diagrams are it's stupid because they're rotated on their side. But imagine that being horizontal. You cut two vertical cuts about 2 inches apart, and then you go in there with a chisel and you break out the bit of rock, the little sample square of rock along the length of the channel. I go to the next slide. Okay, here's our buddy Nick. Nick does his own work, CEO out there channel sampling. Here he's got a face. I believe that's a freshly cut face, if I'm seeing things right. Where he's sawed, you can see he's had a long day there because he's got black around his beard and stuff where he's been breathing in the dust as he sawed. But the guy is legendary in terms of CEOs. How many CEOs do you see doing their own sampling like this? Like he cut that slot, those two cuts that you see that are quite parallel to one another, and then he goes in there with the chisel and basically wedges the chisel in there, breaks out that little block of rock. Okay, the horizontal lines that you see are simply sample breaks. Okay, so when he hits those horizontal lines, that's the end of one sample and then the beginning of the next sample. All right, go to the next slide. Look, here's an example of the rock broken out. So here you see on the left, after it's been sampled, how cleanly that breaks. You get a nice thick, maybe 2-inch deep piece of rock, and it's fairly representative. If you do this right, it should be fairly representative of what you're trying to sample. Okay, it's almost like a diamond core in many respects. If you do this right and you're unbiased and you kind of just put the line across there without preference, like not trying to hit the high grades and just trying to hit the average rock, you can get a very, very good sample out of this exercise. What are you left with after you've taken all the sample? Well, on the right, you can see he's got a series of samples where all the material's been broken out of the channel, and then each one of the wooden stakes marks the beginning and end of successive samples. All right, go to the next slide. This geologist here has had a lot of fun. He's basically taken an outcrop here and cut it every which way to Sunday. He's got a big long saw channel going up the kind of the crevasse there that weathered swale or trough, and then over behind him there you can see he's got a horizontal channel as well as vertical channels. Really good data off of this. Like you can imagine the quality of data that a geologist is going to get there. It's pretty good. All right, go to the next slide. Now we can also do this underground. Now, oftentimes, when you're grade sampling, like underground, geologists will often take a tray, like you see there, that gray thing, and simply take the channel without sawing it. They'll just take it, a chisel, and then go along and take material along a straight line across the face, and that's what this guy's doing. So he's got a chisel there, a mallet with a chisel. He's banging it and breaking off rocks, falling into the tray, and then that guy holding the tray is obviously going to put that into a bag of some sort to take the sample. Now the key here is because rock has different hardnesses and stuff. You want to try to make your cut. If you're just doing it by feel, you want to make your cut about the same depth. You don't want to oversample soft rock and undersample hard rock or something like that. You want to try to stay consistent in how much you're chiseling out at any given spot. So this is a little bit more touch and go in that respect because there is some variability in the rock, and there's some judgment that has to be made by the geologist on how much material is adequate. But it still works. It's good. Usually very good for grade control. Go to the next slide. Here you can see two guys working underground. They're actually sampling the back. The back is the vein or the roof of the working. All right, so they're sampling across the vein, and you can see one guy's sitting there with a chisel. The other guy has a little pail or bucket of some sort, and as the guy above is chiseling that out, hopefully the stuff is falling in the pan and not on the guy's head. But anyway, that's a good example of how you sample the backs in mine. So you can sample the face, which is the like a wall, and you can sample the back, which is above it. All right, go to the next slide. Now, many times in many environments, we can dig trenches. We can sample channel samples along trench walls. Okay, so on the left-hand side there, it's clearly an area where it's been deeply weathered, deeply oxidized. You can see the soils are bright orange. That's probably saprolite material, like heavily weathered, or laterite material that's heavily weathered bedrock. But you trench down a few meters, and then you can actually take your sample along the wall of that trench. You can cut your channel sample, and I'm sure that's what these guys are up to here. And then over here on the right, you can see a shallow trench, and the geologists are literally just picking out, kind of like we saw underground there. They're picking out rock by doing hammer and chisel type channel sampling, equally viable. You have to be careful to make sure that there's not little low spots where it's only soil and you don't really get rock sample and stuff like that. But if you do it right, you can get decent samples. Now the catch is this, okay? When you sample at surface, especially in a heavily weathered environment, you always have to be recognize the fact that some metals can move around quite a bit. Okay, what do I mean by that? Well, in tropical, or we'll call it heavily weathered environments, whether it's wet or dry, you can get a lot of movement of things like copper. Okay, copper, once it weathers, once the sulfide minerals that it comes in break down, and the copper ions are free to move around, the copper often trickles down through the ground. It literally is carried in solution down deeper into the ground. So what you're left with might be lower grade. Okay, so what you're sampling at surface might not be as high grade simply because the copper has mobilized. It's moved downwards through the rock. That can happen with a lot of elements. Silver is susceptible to that. Lead and zinc are susceptible to that. Conversely, you can also get concentrations of some metals enriched in oxidizing environments like this too. Okay, believe it or not, gold can actually, under right conditions, it can be enhanced in surface trenching. Okay, like you can see gold recrystallize. Like you can pan out the gold and you say, wow, these are little crystals. It's actually mobilized and crystallized at surface. Okay, it's weird things happen at surface, but this is better than nothing, right? This is what you have to take what you can get. All right, go to the next slide. Now, oftentimes when we're in a big mineral system, not just veins or something like this, you can take continuous samples over a great distance. This is the best slide I could come up with off the internet. but it shows a place where people have taken long continuous samples. You can take hundreds of meters of samples if you have access. Like if you have ability to see a continuous outcrop of rock, you can take samples across the whole thing. I'm going to talk about one update today in which they did just that. Okay, but these channel samples, usually you don't sample more than say a meter or two at most in length for any given sample, but you can take successive samples that allow you to sample a long distance. All right, let's go to the next slide. Here's an example of probably a lateritic material that a fellow sampled here. You can see he's literally cut an even cut along that line. Gather the material out of that and probably put it in bags. I'm not sure where the marks are. Hopefully he puts a little spray paint on there to understand better where they are. You want to locate the samples as well as you can, obviously, because that data is going to be very important. The data you get out of channel sampling can be used about like drill sampling. Okay, you can actually plot it up in a computer, and you can see, successive samples just like you would in a drill hole. All right. So anyway, next slide. Okay, results from channel sampling. Look, I just have a couple examples to show folks. If it's a discrete structural feature, like what we're seeing here, a vein, basically, and we're looking down on this, by the way. Okay, you can see they took a series of trenches, and really only a small part of any given trench there actually has metal value, like the gold values. All right, so you might see 2-3 meters in these cases within any given trench. The stuff on either side didn't carry much, or at least they're not reporting anything. All right, but this gives you very good information, and this is the kind of data you'd want to see out of, say, the Keystone or something like that. Very discrete, super high grade gold veins, but it gives you a sense of continuity along the strike. So here you have a whole bunch of channel samples that really give you a sense of the continuity of the grades and that vein over a long strike. Okay, very, very good data. It's very useful. This is probably more useful in many respects than a core hole, because imagine trying to pepper an outcrop like this with a bunch of core holes at this kind of spacing, a few meters spacing. It's going to be incredibly hard, right? You'd have to spend tens of thousands of dollars to poke enough holes in here to understand what's going on in the subsurface. Whereas in trenching, you get that easy access and can really build a nice comprehensive picture. All right, go to the next slide. This last example I have here, this is some work that was done by Solitario recently on a project I think is very interesting. It's actually up in the Black Hills. They found, through boots on the ground prospecting, a new gold occurrence that looks quite interesting, but it's early days. Okay, so they did rock chip sampling, just spots where they gathered rock initially. And all of those polka dots, those kind of random polka dots you see on the map on the left, are rock samples that were collected probably early on. Then they also came back and they did channels along trails and tracks and stuff. So they dug a slot along the ground, and they were able to show through channel sampling those sinuous features, like that one on the right-hand side is highlighted. They found that the gold grades are fairly continuous there. Yes, it kind of comes and go in terms of grade, in terms of high grade and low grade, but overall, the trench is now showing them, hey, this gold mineralization isn't just random spotty stuff. This has actually got some continuity to it. Again, I think this looks very interesting, and this gives you a bit more breadth or understanding of what might be there, and then just a few random rock examples. Okay, so look, I hope I've answered the questions that were brought up a while back, about how channel sampling is done, the techniques, and then the results that you get from it, what they shed, what kind of light is shed on a discovery like this. All right, but if there's further questions, like, yeah, hey man, put them in a little window down, on the YouTube video or whatever, and I'll have a read of them over the weekend, and hopefully I can do some more of these. All right, go to the next slide. Okay, we got a few updates today. Let's scoot through these because we got quite a bit. Go to the next slide. There we go. Snowline. Look, these are some of the most impressive drill results to come out of any project in the gold space in quite some time. 471.6 meters, 2.4 grams. It's like I think 1,100 gram meters and change. I didn't calculate it, put it on there. Apologies, but these are mega holes. Okay, these are absolutely phenomenal drill holes from the valley area, showing once again incredible continuity of grade, and they basically started from grassroots. Okay, I'll show a 3D model here in a minute. This data is very good, but there's other aspects of this drilling, this recent drilling in Valley, I want to touch on here because I think it's very important too. Go to the next slide. Okay, the other thing I would point out, look at that hole 74. Like the two high-grade holes, 73 and 5, are down here in the central part of the high-grade corridor in Valley. But 74 has a lot of gold in it, and it's actually a fairly aggressive step out. It's like 200 meters and change off to the northeast, yet it sees a significant amount of gold. So let's look at this in cross section real quick. Go to the next slide. Here you can see those three holes, so 73 and 75, which are the big holes, okay, big gram meter holes that were in the headline. Notice that 73, for example, over here that extends down to the left in the bottom, you're seeing a lot of grade down below that really does help confirm there's a lot of gold outside of that pit. The pit is a little black jaggedy line that goes down and up. There is a lot of gold down there, guys. Okay, there's probably more work is needed to determine if that could be brought into a model. Okay, but then if we go over here to 75, look at the bottom of 75, goes way outside the wall, and there's a whole bunch of gold down at the bottom of that as well. Okay, so not only did it confirm the high grade, it went down and it found a big extension. Look at that block model. It says less than 0.4 gram. No, it isn't. Okay, that hole says there's a lot of gold down there. And that was confirmed by hole 74, which also hits a lot of gold down towards the bottom as well. Okay, 74, by the way, also shows that eastern edge is open. There's a lot of room over there to add a lot of tonnage. And I'm going to show that a little bit better with screen share here and do video or 3D model. Okay, we got to go to Snowline. You guys can see, correct?
Not yet. Not yet.
Not yet. Okay.
Coming up. Yep, I've got it. Yep.
Okay, so this is the same picture we were looking at. Here's 73 and 75, and then hole 74 back here. We're going to take a look at these holes and what they mean. All right. So first of all, 73 and 75 are in this location in here. There's 75. There's 73. Again, if I turn this around, you'll see there's a lot of gold picking up or present way out here. This is way outside of the pit boundary. So all of this mineralization that they're seeing at depth in this general area is not currently part of the resource. But then hole 75, okay, we see here, this bottom bit is all mineralized. It is also well outside of the resource. So we've got confirmation there's a bunch of rock down there. And then this hole right here, this guy right there, is 74, and it's seeing quite a bit of mineralization down here at the bottom too. All right, so the whole idea that there's a big block of rock roughly in here, okay, that's going to be mineralized and is outside of the current resource, looks like it's proving to be true. Okay, so I'd say there's a significant room for additional tonnage in this general area right here, and that's something I've kind of beat the drum on now for quite a while. Okay. I would also, if I turn this around like this, I would point out that the system is still open. This is a little bit hard to see, but we're going to rotate this back and forth. You can see very high grades here. There's this open corridor down this way. Okay, there's nothing cutting this off in this area here, which would be to the east or southeast. Okay, there's actually room for growth, and I kind of think that a few holes in this general area, which is this side of the high grade, there's a good chance they're going to find some more down there. Okay, so let's stay tuned. I also think there's room on this side for growth as well. All right, but this is looking great. Everything's a go at Valley, and then go back to the deck there. All right, next slide. Next thing I want to talk about is this. This is Aurelius. Okay, this is another target. This is the first drill program at this target that Snowline's undertaken. They talked about this target, the soils that you see on the left-hand side. Oh, it was before they came out here in the field season. So sometime, I think in the spring, maybe March or April, I think they first talked about this. A lot of really robust values. In fact, a lot of half-gram plus values at surface. They also have rock chips. Those triangular samples are rock chips. Some of those are, yes, channel samples like I talked about. Okay, so if we go over here to the right-hand side, you can see there's two tags there. One says outcrop, the other is outcrop. These are channel samples where they sampled continuous runs. So 14 meters of 2.3 grams and then 17 meters of 2.01 grams. Okay, so, well, geez, that's kind of short. Well, that's the amount of outcrop they had accessible to them, right? Like it was covered beyond that. But those are really good numbers. Okay, so let's see what the company did. Well, they put a drill hole more or less right underneath this guy on the right, on the bottom, and then they have another hole over here. It doesn't quite go directly below the 17 meters of 2.0 grams, but pretty close. Okay, it's 24.002. Goes slightly to the we'll call it 100 meters to the west of that. But both of these holes sounds like they saw some interesting rock. Let's go to the next slide. So I did talk to Scott. There we go. Okay, about these rocks that they encountered. Basically, they found breccia with sulfides in both examples. Now, in this case, in this particular box here, this is non-oxidized, so it's fresh sulfides. Okay, which is a good sign, usually for gold and stuff. In the next slide, we're going to look at in a minute. Don't move there just yet. It's oxidized. It's bright orange, so the same stuff but brightly oxidized. Okay, so I said, Scott, what is this? What are we looking at here? Well, his answer was this is basically breccias where fluids clearly have pushed their way up. It's not intrusive. They did see little dikes of intrusion, like little skinny zones of intrusion. But this is the volcanic rocks that they were drilling through above an intrusion. Okay, so Scott's view is that this is the tippy top of a big reduced intrusive system that's at depth, a little bit deeper down. Not a lot deeper probably, but just a little bit deeper. Okay, he thinks that the fluids, based on the chemistry and so forth of what they're seeing in these in this area with the bismuth and tellurium and such, he thinks that this is a very, very tippy top of a reduced intrusive system. And these samples, these core intervals, which were sizable, okay, they're sizable intervals. They're not little quartz veins like we're used to at Valley, but they are probably derived from the same kind of system. And they are in the carapace or the roof of a reduced intrusive system. Yeah, I think this is very, very encouraging, and I'm actually quite hopeful that we're going to see, given the outcrop samples or the channel samples, I think we'll see some long runs of very interesting grades here. Okay, 2 grams, that's in line with what we see at Valley. If they hit long, tens of meters of 2 grams in some of this rock, that would be a wonderful outcome. Go to the next slide. This is basically the same stuff, but it's oxidized. Okay, so this is a sulfide breccia that's been oxidized. Now it's bright orange and red. But again, it's sitting in a position at the roof of a reduced intrusion that's probably immediately below this. All right, so very good first start. I think they have a little bit more drilling they're doing here to further test it. They're very encouraged by this. We've got to wait for assays, but this is a good first step. Go to the next slide. Okay, now we're going to talk about Goliath. Goliath had a further update. They've got, I think, around 8 holes done here. So they are confirming that the first 8 holes of this 24 season have hit significant mineralized intervals. And 75% of those holes, so 6, basically hit visible gold in a lot of these mineralized intervals. Okay, so this is encouraging. Now, bear in mind, they are drilling down and testing these new zones, particularly Bonanza and Golden Gate area, and they're also seeing mineralized intervals below Golden Gate. Okay, so they're kind of finding the center of gravity of the system, and I think that's very important. I would expect a lot of really good assays to come over the next few weeks from this story. Don't forget, we still are awaiting assays out of hole 235, but we're going to have an absolute ton of assays, of high grade assays, in my view, out of a lot of these holes coming up. One of the beauties of drilling a system like this is, boy, when you start to find that sweet spot, okay, there's where all the loads are well mineralized. You can start to sharpshoot the thing better and really work on assessing that high grade component. All right, let's see. Go to the next. I think I don't have a. Yeah, okay. We're gonna go to a model real quick. I got a special treat for you today. Okay, this is gonna blow people's socks off. Okay, so we're gonna go to Mr. Leapfrog here, and all right, tell me when you can see it.
Oh, yeah. Yes.
Okay,
Good.
we're going to Goliath first. Okay, this is basically the model of all the loads that Goliath has. It is an enormous data model, so I kind of turned the surface off, but you can see if I turn this around, see all these blue things underneath here? Those are the load structures that have been modeled to date. I'm going to turn off topography because it makes the thing just stupid slow, and we're going to look at this thing like this. It's easier. Okay, now I've talked about how this thing looks like a plate of baklava. The load parts being the walnuts in baklava, and you can see that really easily with this model. Okay, you can see there's a load there. There's another one here. There's one right back there. There's one right here. There's one right below, and even another thing showing up down here. Okay, but look at down here. This area down here is where most of those 8 holes that I mentioned a minute ago have come through, and they're actually seeing more loads down below here now too. Okay, so it's not just the loads that we have modeled, like the Sherbet and the Bonanza and the Golden Gate, etc., and what do they call it now? The Godzilla's feeder zone or whatever it is. Look, there's a lot more happening down here, and as they drilled some of these deeper holes, a lot of that VG is actually hiding down in this neighborhood. Why is it important? Well, I think we're seeing a robust stack of loads. I'm going to do something that I like to do to have a look at deposits like this. We're going to go and slice through this model so we can look at it in 3D. All right. And then like this. Okay, you can see here from the side what these loads look like now. Okay, and these have been wireframe. What is a wireframe? Well, wireframe is when a computer, enabled geologist basically comes in and creates a polygon that puts the loads inside of this envelope. Okay, think of this like an envelope, and the letter would go inside here. Okay, so the wireframe is a 3-dimensional shape that encompasses the loads themselves. Okay, and you can see that they're anastomos. I mean, they kind of come together and split apart. They're kind of like little braids in a wandering river or something like that. But you can see this is why I say baklava. It looks very much like baklava from the side. All right. Yes, there's loads down below here. Okay. So there's definitely more going on at depth. But notice how we got a series of relatively flat stacked loads here. All right. That's pretty cool. Well, I've told people repeatedly, I think this puppy looks a lot like another deposit. It's earlier days. Okay, there's a lot more drilling they have to do here, and I think it's going to get bigger. But let's go look at something else. Okay. Oh, wow. What's this? This is a model of a very famous deposit. And if anybody asks, I'll have to shoot them. I'm not telling where I got it, but whatever. It's a little deposit called Pogo. And this shows you the loads.
Wait a second. We're not seeing anymore. It looks like it changed. Hold on a second. Stay there.
Hold on.
There we go. Now we're seeing it.
Okay. Okay. There's a little deposit called Pogo. All right. And you can see, wow, look at that. It looks like baklava from the side. Looks pretty familiar, doesn't it? All right. This is why I keep harping on this Sherbet thing being some, geologic analog. Whether it's size-wise, it's the same. I don't know yet. I mean, they got a lot of drilling to do at Goliath to get to this level. But hey, we can always dream. At least we have an analog to compare to in terms of geology and what these things can do. All right, here you can see from the side, stack load system. Lo and behold, flat loads. They kind of anastomose. It's a little bit hard to see in this particular position, but I think you get a sense of what I'm talking about. All right. Let me see. Maybe I could, since I got a couple of minutes here, maybe I could try cutting another section real quick. See if I can cut it in a better way, like this, maybe. There we go. Yeah, it's a little better. It shows you, but there's your Bach level. Okay. This is what I think Sure Bet is going to look like ultimately. Okay. All right. So this is, all these gray things, by the way, are workings, underground workings. These are tunnels and drifts and stuff that access the red, which is the ore body. All right. So let's go back to Goliath. What do we need to see here? Okay. So I'm going to turn this down. We're going to turn the flipper off. We're going to turn topography back on. Can you see it?
Yes, man. I wish we could cut one of those sections in the yield curve. Wouldn't that be fun? Looking at that.
There you go. You just need a geologist there, Todd. Okay. Now I'm going to kind of twist your mind around a little bit. Okay. So first of all, look, the company's focused here, and they need to be. Okay, but they're finding extensions of the loads, now as they do more and more work. And one of them was way the heck over here somewhere. I think it's off of this image even. It's called Jackpot or something like this, I think they call it. And it's way the heck over here. And it's got some uber high grades. Okay, so I think I'm going to stick my neck out and I'm going to say, yeah, Sure Bet and all this looks pretty darn interesting. But if you want to find something the scale of Pogo, there you go. Like Pogo, here, let's go. Well, I won't go back. But Pogo is about 3 kilometers across. Okay, so we need to find something that's going to be from, say, here over to here in scale. And that would, if we start to see these kind of veins way over here at Jackpot, that could get exciting. That could get real exciting. Okay, now I'm going to point out a couple of holes that nobody cares about, but I think are actually very important. Okay, they're right here, right there. Okay, it's a little bit hard to see them because they're buried under the surface here. Or sorry, right there. There they are. Okay, these were drilled, I think, last year. I'm going to move this up. And they were just random exploration holes. But look at this here, okay? Here we have a hole drilled in the middle of friggin' nowhere. And look at the grades here. We've got let's see, 5 meters, from 58 to 63. 5 meters of 11.5 gram gold equivalent. Wow, that's pretty good. In fact, inside of that, there's some higher grade. We got 1 meter inside there. It's 57 gram. Okay, look at how far that is away from all of this stuff. Do we really know what the heck is in here or anywhere else in this black area? No, we don't. But the fact that a random drill hole hit a 57 gram per ton sample way the heck out there tells me she ain't done yet. Okay, this is early days. The company's doing the right thing. Don't get me wrong. They're doing the right thing, and they're focusing on this area. They're following up on that critical area, especially now that they found these high-grade ledges below here. Okay, but and we're anxious to see the assays. But how big could this get? Well, there's a drill hole right there. See that guy right there? That's a bazillion meters away. That could tell us this thing extends way out here somewhere. Okay, great grades, similar to what we see over here. Looks very much like Pogo. Now we're starting to see the scale of Pogo. Stay tuned. I think this story's got a lot of room. Okay, let's go back to our deck. I got to put my skates on the big fat way now because I blew my time on that point. But it's worthwhile. Okay, Brixton put out some results. Second hole they have from Camp Creek this year. Very long intervals, once again, of mineralization. They quote the entire 1,126 meters. Look, I'm focused on the sub intervals down there. Okay, like the 371 meters of 0.31 with 0.08 gram gold and pretty strong silver and moly, etc. Those are the ones I'm focused on. This is looking pretty interesting. I want to show you in 3D what this thing looks like now, because I do think the picture is finally crystallizing. We got to go back to Mr. Leapfrog here. Go to Brixton. Okay, hopefully you can see this.
Yes.
Okay, look at how much they've improved this model over time. Okay, they're drilling, in this general area. In fact, I think this is our hole right here. I think might have it wrong, but whatever. We're close enough. This is holding together really well at this point, and we're talking about something that's 600 or 700 meters this way. It is open still. Okay, I think it probably rolls and goes down through here like this, but this is starting to look like it could host some serious tonnage. Look at some of these holes here. They still have grade down to the bottom. Okay, so there's a lot of potential down in this general neck of the woods. Could it be 1 billion tons or more? There is room for it. We'll have to see what happens. I don't know what other drilling they have coming up here, but this is encouraging. And that pink, by the way, you can see over here the colors. Okay, pinks and reds are generally like 0.5% copper or better. All right, so that's a nice cohesive higher grade porphyry deposit right there. All right, let's go back to Deck, Mr. Deck. Go to the next slide. Okay, Hannon, this is the company that put out some channel samples this week, and everybody's emailed me and said, "Oh, that's kind of low grade." Well, no, you don't understand the channel samples and oxidation that can have the effect. But this is actually a very good result, 126 meters. So they were able to sample continuously for over a football field length, 0.22% copper. There's also a fair bit of gold in there. I think there's like 0.1 gram of gold or something. People say, "Oh, that's kind of low grade copper." No, it's because it's leached. Okay, the copper has been oxidized, and probably a significant portion has been trickled down, moved down through the earth to deeper levels. Okay, but this is a good start. It says, "Hey, this is a nice ripe intrusion, probably an alkaline intrusion, given the gold content, that could host a major new porphyry discovery." And this is just one of many porphyries that they have on this Provisto project in central Peru. It's on the east side of the Andes, brand new area, different age. I think these are Miocene porphyries, very similar to ones up in Ecuador that have made some big discoveries here recently. All right, but they've got a lot of work going. They got some geophysical work commencing soon, LiDAR as well, which is basically a look at the surface, detailed surface topography and stuff like that. Go to the next slide. And then this shows you, like, they always put really good pictures, geo pictures in their news releases that help understand things. You can see where the channel samples are. You can see that it's an elongated porphyry, at least the way it's interpreted right now. And then over here, you can see some of the rock samples themselves. A lot of copper oxides. That's that mobilized copper that I talk about. What does it mean? Well, it means those all look highly altered, well stockwork vein. Looks like they're onto a very robust copper gold porphyry discovery to me. And I can't wait until they can drill it, because I think that's really going to show us the grades of this thing. All right, go to the next slide. Okay, Nick Rodway and his crew have been drilling up at up in BC, up northwest BC, on the Sulphide City porphyry area primarily right now. This is a porphyry skarn area, and they had some nice visuals in some of the holes. Okay, let's go to the next slide. In particular, they had a little over 11 meters of continuous sulfide in one particular hole. So 11.8 meters in hole 61 of what says massive sulfide exoskarn. What's exoskarn? Well, when you get an intrusion comes up, it's very hot around the contact of the intrusion, and it cooks up the rock that's immediately adjacent to it. Exoskarn is the rock that's cooked up immediately adjacent to the intrusion. Okay, why is it important? Well, because sometimes those intrusions can turn out to also be porphyries, which host a lot of mineralization as well. But in this case, what they're highlighting is the CRD mineralization, or the sulfide mineralization that accompanies that skarn. Go to the next slide. and it's located. Where's the next slide? Uh-oh, stuck again. There it is. There we go. All right, you can see um, they've outlined it in okay, whaleback is what they call that, the 11.8 meters. It's kind of right there in the core, in the center of the slide, but they're starting to see good sign that the sulfides trend northward, and they are trying to show in this image that there's a lot of chargeability starting to evolve in the geophysics. So basically a big bunch of chargeability features to the north. And I think they're starting to take the view that the porphyry is hiding up there too. Okay, so this is probably going to be a great result, when they get the assays back. But I would also expect to see, as they drill more to the north, I'd expect to see more and more exciting stuff out of the company over the next few weeks. Go to the next slide. Here's a photo of the skarn with the sulfide. Look, it takes a geologist to love this kind of rock, but when you see a lot of dark greens, those are the skarn minerals, the minerals that form when the rock gets cooked up. And then the black stuff is basically sphalerite, which is zinc, and there's probably galena in there as well. Really nice, juicy looking rock. All right, go to the next slide. Okay, sorry. I thought I had one more slide. I think I reduced it a little bit. Okay, Altamira had some news this week. A few weeks ago, they had a guy named Richard Silito go to field and work with them to tell them what he thinks their systems are, the things that they've been drilling recently. He looked at Maria Bonita and concluded that it is a porphyry. You can see the rocky image down there at the bottom, nice sheeted quartz veins. Richards is Mr. Porphyry. He's the smartest porphyry geologist we know or we have in the mining industry. And whatever he says is pretty much you can take as gold. I mean, it's truly, he's the wisest sage out there. Okay. The company did announce a few more results from Maria Bonita. These are just the remaining holes. There were several intervals of a few tens of meters of kind of half gram or 0.x gram stuff. Interesting, but the next part of the news release, this new target they discovered at Apiakis, really caught my attention. I think the company is kind of taking the blinders off, and they're starting to think about there being multiple porphyries on their properties in this region. Go to the next slide. Okay, so they've been drilling at Cajueiro, which is up in the upper left there. Cajueiro is where Maria Bonita is, but they also have done prospecting back over at Apiakis in light of what Dick Silitos told them about the potential for more porphyries here. Okay, I think they went back and they said, you know what, we saw some interesting rocks. Maybe we should have another look at those rocks and determine if we missed something here. Okay, so they went back to Apiakis. Go to the next slide, and they did some sampling in an area about 10 kilometers from Matum. Recall, they drilled a few holes at Matum, hit some low grade. Wasn't ore, but there's still a lot of gold kicking around there. But they went over to this Casa Branca target, 10 kilometers to the east, and it was because they had found these rocks, these porphyry texture. Porphyry is an intrusive rock that has bigger crystals and a finer ground mass. So they found porphyry samples like this. But then they started rock chip sampling some of this and came up with some pretty impressive numbers. Look at the chart on the right-hand side. These are individual rock samples. Okay, they're spot samples, but they found some bonanza grades up there, like a 69 grammer, a 52 grammer, amidst a lot of other stuff that's running, 0.x to multiple gram type grades in and around this porphyry that you see in the middle bottom. That's interesting. Okay, so they have a brand new target. They're starting to do some work there. I think Michael said they're going to have some geophysics or something they're going to do. But this could rapidly evolve into a new drill target. Okay, go to the next slide. We're getting there. Sorry, guys. We're almost done. Juggernaut announced an update of drilling at Bingo. This is not Midas. This is Bingo. So this is the one that's further to the north. It's kind of up in the vicinity of Goliath and Sherbet. It's to the west of Goliath. Very similar geology, though. Okay, they've seen some really nice intercepts in all of the drill holes they've completed to date. And they've seen sulfides like you see in the photographs here, which indicate probably pretty high temperature and intrusive related mineralization like we see over at Sherbet. So cobaltite, say, well, big deal, what the heck is that? It's a mineral that contains cobalt. Think of it like cobalt-bearing pyrite. And cobaltite is almost a dead ringer for a very close tie with an intrusion. Okay, so this is starting to look and smell a bit like a Sherbet type discovery. Stay tuned. We'll see what the assays come back. Go to the next slide. I think there's one more company. Yes, Maronan. Maronan had some news out this week. They've been drilling in the area. Don't forget, these guys are well advanced. Okay, they have a deposit here that should become a mine. It's on track to become a mine, but they want to focus on this area. They call them the starter zone. In fact, it's this shallow. I think they call it the shallow silver zone specifically. And they had some really nice infill holes here recently, including this one here, 23 meters of 310 grams silver equivalent. It's like 10-ounce silver equivalent. 23 meters, true width of which might be about 70% of that length. You can mine in bulk. Okay, that's excellent stuff. You can see where it is on the map here. You got a lot more holes to come, but it did include the highest grade intercept they've had to date on the property. All right, that's it, guys.
All right. Thanks, Quentin. So you can see we have a lot going on. Quentin, of course, just shared a number of the companies that have some news out recently that we own with and their drilling progress. But we have over 70 companies in our activist metals portfolio, mostly focused on the exploration side of things. And we own a lot of gold, silver, and copper in the ground, early stage discoveries of various stages. These are target gold, silver, and copper deposits. But this is where the value is in the marketplace today. Gold is already breaking out to new highs, but the exploration universe of stocks, and there's several thousand publicly listed companies out there. They are lagging, and there's a lot of catch up to go. If you have a guy like Quentin, an economic geologist who knows how to, who knows what will make an economic gold deposit at the end of the day, what will make an economic mine, that's what we bring to the table here with our activist metals strategy. We have an incredible deep value portfolio that we think has a lot of upside appreciation potential in this, early stages here of this commodity bull market, this gold bull market. Yes, gold is leading the way, like Tavi showed, but once again, the explorers are lagging, and that's the catch up. That's where the lag is your friend if you're looking to put money to work, because there is a lot of catch up to go here. And at the same time, we have the overall S&P 500, looking like a major top. All we've done is come back up this week and retest those, the last Friday's closing levels before that big gap down on Monday. It's like a retest of the gap down, and here we are going into a new weekend. I think the beginning of the correction has already started. You're seeing it in the Mag 7. Warren Buffett just sold almost half of his Apple. I mean, come on. What do you think? He knows something? Like Tavi said, he's actually a pretty smart macro guy too, not just a value investor. And he's sitting on record cash. He doesn't go short like we do in our global macro and long short funds. We're not afraid to go short. You check out our long-term history in the global macro fund. It has a negative downside capture ratio. What does that mean? It means since inception in 2006, on average, in months where the market goes down, our fund goes up. How many funds are out there that have done that in this period, all the way since 2006? It's because we're not afraid to. We're not afraid to short. We're not afraid to exercise our value and quant fundamental views. On the short side of the portfolio, we have long positions too. We're hedged, but we're hedged on the long side with precious metals. as well as energy stocks and an early stage biotech portfolio, but predominantly it's the commodity natural resource equities and predominantly our precious metals. We've got base metals too, electrification metals, gold, silver, copper. We got it. We have a lot of it and great value. So call Merrick if you're interested in learning more about our strategies. Timing, I don't think could be better. Yes, we need the overall tech market and the large cap stocks to roll over before gold can really get going. But it's starting to happen. So that's it for me. Tavi, any final comments?
I have 2 comments. Number 1, boy, Quinton, you're not selling this when you show a picture of Nick Rodaway, doing a channel sampling. His face was all, dirty. We got, we need more geologists in the space. I'm joking.
We do.
I'm just joking. You know what this reminds me? I think Quinton used this analogy. Correct me if I'm wrong. Maybe it was somebody else. And maybe this was for something else as well. Of the beach ball, under the water. So, when you press a beach ball under the water, that's what it feels like with the commodity space. When the market falls apart, like it did on Monday, yeah, commodities fall, but it's not like, like we tend to see, like we saw in the deflationary shock of 2008 and other times when, you see copper completely falling off a bat. That's not the case at all. Like this commodity is actually outperforming the overall market. You can see emerging markets outperforming the markets. In fact, I would actually go even longer than that and say that the miners actually did much better than the market. I think NASDAQ was down close to 4 to 5% at some point, and the miners are holding up very well during those days. I think those are the signs that we need. If that rotation happening that tends to happen in a nasty way, out of those technology companies, out of these, really frothy valuations into something new. And, imagine after the storm, how, the commodity space will do. That's sort of the analogy that I think it's perfect to explain what's happening, in my opinion. Anyways, all right, next week we're going to be back. If you are interested in this, please follow our work on YouTube. If you have interest in our funds, as Kevin was mentioning, I would suggest you to speak with Merrick. Here's his contact information on the screen. And I really suggest you to have a conversation with him and understand the different ways and different strategies that we offer here at Crescat. But thanks everybody for watching. We'll be back next week. Thank you.